Hey everyone, I'm Jeremy Szafron. This is Kitco News. Don't forget to subscribe for the latest updates. Well, something big has been brewing in the gold and silver markets, and today on Chart This with Gary Wagner, we're here to uncover what's really going on behind the charts. Now, gold's recently shattered records, climbing past that $2,500 mark to reach a new all-time high before easing back just a bit. Meanwhile, silver has quietly crept past that $29 per ounce, teasing us with the possibility of more to come here. Now, the last time Gary Wagner joined us just a few weeks ago, he called it. Wave 3 was in full force, and he set a bold target of $26.75 for gold. So are we still on that path? Is there some new twists in the tail? Well, let's break it all down together. I'm thrilled to welcome back Gary Wagner. He's our resident technical analyst at the editor of thegoldforecast.com. Gary, great to have you as always.
Thanks for having me, and it's great to be here. It's an exciting time for both gold and silver traders, yes.
All right, Gary, great work a few weeks ago. You correctly, as I mentioned, identified that we were in that wave 3. You talked about that target of 25.56, possible extension past that 26.75 level. And then, of course, just last week, we saw that little climb. You know, we hit that all-time high of 25.11. Are we still on track for a higher target here?
I absolutely think so. Right now, the market is reacting with optimism to the potential for rate cuts further on down the road. Yeah. Expectations have widely grown right now that September will be what we'll call a pivot date, the point in time in which the Federal Reserve shifts from a very aggressive and restrictive monetary policy to an accommodative monetary policy. And they're going to do that by a series of rate cuts. The anticipation right now is a 0.25%. A couple of weeks ago, it was 0.5% after the wild jobs report, but that's kind of moved out of the market in terms of optimism or consensus. But the expectations of the first rate cut in many years by the Federal Reserve at the September meeting is high, and that's what's driving the precious metals higher along with equities.
Yeah, of course. I mean, the fundamentals seem to be backing it up here. We're seeing the dollar obviously crash a little bit too. Okay, let's talk about the current technical indicators then, if you bring up the chart, because last week I know we were talking about that spring-like movement. I recall it because you said, you know, we might see this and then it might snap back, and we seem to see a little bit of profit taking, but still some room to go here.
Absolutely. We're looking right now at a daily chart in candlestick format of gold. And what I'm pointing out really is the fact that we've had a series of intraday highs coming in, going back to April, then again in May, another one in July. The most recent one came in just last week, middle of August, and of course, one in the beginning of August. So when it broke above this particular, what we labeled as really strong resistance, you can see the size of that candle. Now, today we've had gold backtrack just a little bit. That's this small red real body. But if you notice the low came just above about 25.20, and 25.20, of course, is that level that we earmarked as a technical level of resistance. And that's important. In terms of what I believe we could see, I still believe that we are in a motive wave, a impulse wave number 3. And I believe we could see a track to anywhere between 25.70 and 25.90, possibly hitting 2600. But that's where I would look for this particular leg of a rally to conclude, maybe kind of touching 2600, testing the water, so to speak. But the thing about it is when we look at silver in a little bit, we're in a defined range. We've been there in terms of the highs as well as the lows. Mm-hmm. And with gold, it's not like that because we're trading in uncharted territory. So there are less tools that we have to use to forecast where we think the upside of gold is rather than silver. It's a lot more clear cut with silver. But all I've done is a basic Fibonacci extension. I've looked at this rally and I've taken the move from what I'm labeling as wave 1 over to wave 3. A 1-to-1 takes us to 25.84. And then these are possibilities of where it could go if it moves higher.
Yeah, interesting. Okay, well, I mean, I want to tease where it could go if it moves higher, because does that indicate a potential early start to wave 4? Is that how that goes? Or is this, going to be a part of a broader correction?
The one thing Elliott wave doesn't account for as much is time element, how long it takes to get there. Realize that a wave 4 in Elliott wave is a corrective wave. So that's going to occur after this current rally runs its course. The market will correct, and we'll look. There's different ways to look at where the correction could go. And typically you use Fibonacci retracement. But for right now, we're clearly embedded in a bullish rally. Of course, noise on any given day can move the market higher or lower. But as a whole, I would expect the market to continue to drift higher, at least for another $20 to $30, $35 before it begins to get overbought.
Yeah, interesting. Okay, so if gold breaks below those key moving averages, like the 50-day or the 200, does that influence this expectation for wave 3 or the broader trend here?
Well, typically what happens is when we're looking at the moving averages, realize that those are basically lagging indicators. So I've just put them up, and you can see how tightly they are clustered together. In a bullish market, first of all, the green is the 50-day, blue is 100, long-term 200 is in red. In full bullish alignment, you have the lowest value, meaning the one that's sitting the lowest being the longest time period. So you've got the 200-day at the lowest value. That is under the 100-day. Both of those are under the 50-day. And that's what we call full bullish alignment. In a bearish alignment, it will reverse, where you will get the 200-day above the 100. But really what you look for with those is, by definition, areas of support, or when they are above trading, as potential for resistance.
And when do you think, Gary, I mean, you mentioned that bold target of 26.75 for gold last time, and you said maybe going into the new year here. Is that when you're anticipating something like that to take form?
Well, according to the model that I am using, we're going to see the rally go as high as maybe 26, but no higher. And then we're going to get somewhat of a correction. I'm plotting this at about 25.15, and it's going to be that fifth wave, the last wave in the motive phase, that will take it to the record highs that we hit this year and next year, which I believe could be as high as 2,700 by the end of this year, first quarter of next year.
2,700 first quarter of next year. Well, you've certainly, let's knock on some wood. The studio's made out of glass, but I know that you've been correct lately. Okay, obviously silver has been in a little bit of a rebound here, and it hasn't been making the headlines quite like gold has, but I mean, it's pushed above that $29 per ounce. Beyond the Elliott wave theory, talk to me a little bit about these resistance levels. We know that we see a $30 resistance level, but is there anything to suggest that silver might continue higher past that $30?
Well, we've just put up a long-term, this is a 2-week chart. And the reason for that is I want to take in the all-time record highs. And of course, that happened in the middle of 2011. Unlike gold, that has hit multiple record new price highs, new intraday highs, silver has never touched $50 once it hit that area. It had a long, protracted correction in the same way that gold did up until the end of 2015. But if we take it to where we are now, if we look at what happened back in 2020 and 2021, we had silver flirting with highs from $30 to $32. That also corresponds to a former level of support before it broke hard. And so now when I kind of move this chart up a little bit, and let's focus it. Once we hit 22.75, we had the first of a higher high that came in since its deep correction. It really traded and flirted with just above $32, came down, and look at what it's done over the last 2 weeks. It has been performing very strongly. Right now, I'm looking at a support at just about $29.25. The next level of resistance is about $30 per ounce.
$30. And it's so funny when we look at that chart because it almost seems, I have to, forgive me, I have to put on the glasses. We're all getting a little older. But it seems like it intentionally gets crushed down every time it hits that resistance. I mean, besides fundamentals, what's at play here?
Well, fundamentals are key, obviously, but there's a key difference in the fundamentals of silver and gold in that silver is it's a precious metal, but it is highly used in industry. And because of that, it has ebbs and flows, peaks and valleys based upon the economic conditions that are in play. Secondly, with the green legislation that Biden passed, a lot of silver had to be used for solar, for electric cars, things of that nature. And because of that, it's had different cycles of demand. And one of the things that we've noticed is with the silver mining stocks is like the gold mining stocks, they have been lagging, but they really took off today also.
Yeah, well said. Okay, well, there's obviously, the Fed goes hand in hand when we talk about safe havens. We talk about gold and silver. There's a lot of narrative out there. You mentioned off the top that on this week we're going to see Jackson Hole. Obviously, that's a huge conference that takes place. We're going to see Jerome Powell say some remarks. The market, as you said, is anticipating 25 basis points, but possibly 50 as well. I mean, people are still on that camp. So talk to me about what you expect here. And more specifically, we don't even need the analysis on, what to expect on the point basis drop. But let's talk about what your predictions are with gold if there's a 25 or a 50% basis point.
Well, my belief is what is important are how many rate cuts the Fed implements this year. It's widely expected that they're going to do a rate cut in September. The odds are that will be a 0.25% cut. Now, the Fed meets 3 times until the end of the year, September, November, December. And the question is, will they follow that with another interest rate cut in December or November? Will they have 2 this year or 3 as they had planned a while ago? I personally believe that 2 cuts are likely. I think that we'll have more than 1, and I'm not convinced they'll be as aggressive as to cut it 3 times.
Well, I mean, could a dovish Fed, even with those 2 basis points off the table, I mean, could that push gold through these major resistance levels, or are we more likely looking at a buy the rumor, sell the news type of scenario here?
Yeah, I mean, my sense is that market participants have largely factored in at least 1 rate cut. If we get the second one, that's going to move gold higher faster. Resistance would come if they, for example, didn't cut rates in September, which I believe is highly unlikely. That is pretty much baked into pricing. But after 0.25% cut, they haven't baked in the potential for 2 or 3. And that's what will change the momentum of gold and silver.
Yeah, well said. And of course, we'll be keeping an eye on it all here all week long at Kitco News. Gary Wagner, editor of thegoldforecast.com, joining us today. What a ride. What a ride it's been. Thanks for this, Gary. I appreciate your time as always.
Thanks for having me. It's been great.
Of course. Looking forward to the next couple of weeks. Hopefully more analysis on the upside. I'm Jeremy Szafron for all of us here at Kitco News. Thank you for watching. Hit that notification button. We got lots to come this week, so stay tuned. We'll see you next time.